Hi, everyone. Welcome to another edition of Ask Marvin. It's such an amazing feeling to be part of your journey towards financial freedom. And I wish I could do more videos. My schedule has been just crazy over the past few weeks. But to those who have been sending your questions over Twitter, Facebook, and through my website, continue to send them. I'll try to read as much and answer as much questions, especially now when the market is volatile. I've been getting a lot of people who are a bit scared, who are panicking. And that's what I always say, the best place for you to be when it comes to investing is you do something based on an informed decision. Now is not the time to panic. Now is not the time for you to actually lose hope. But now is the time for you to even study further because you will only go as far as what you know. You will only go as far as what you have developed inside. And earning is just a byproduct of your skill, your experience, and the principles that you have learned out and started to study over the past few months and weeks and years as well. So never be scared of learning. It's your greatest weapon. It's your greatest asset. The more you invest in yourself, the better you will become. The more well-rounded the decisions that you will make as well, especially when you see a lot of volatility in the market. So my heart is to see more and more Filipinos be profitable in the market. I would love to see that as our economy is growing, more Filipinos would be part of it. More Filipinos would take advantage of it. More Filipinos would be, I guess, enjoying the fruits of what's happening in our market. That's why I do these videos. I want to be part of it. This is one of the things that keeps me up at night. I just really want to see all of you learn to maximize how you can grow money in the stock market. And I just really hope that these videos are beneficial for you. So just click subscribe in our YouTube channel so that you get updated with what's happening with regards to the videos that I start creating. So for this Ask Marvin session, we have something that's very interesting coming from Tina, who's an engineer from Singapore. What she's asking is also something that's very relevant to what's happening to the market today. As you all know, the market has dropped over the past few weeks. And what she's asking is this: what should you do when the market is dropping? Which is a very valid question that each investor should know, especially now that as you see the markets drop, what are you supposed to do? Do you sell? Do you cut? Do you hold? Do you buy some more? Do you add some more cash? But before that, I just like to make a quick update on what's happening with regards to the seminars that we're producing. This November 19 and 20, I'll be in Iloilo where we'll be doing a lot of technical analysis sessions there. The same with a week after that, we'll be in Singapore for November 26 and 27, where we're going to do technical analysis sessions and fundamental analysis sessions as well. And to wrap everything up, to close it, of course, Manila has always been in the center of all of this events that we've been doing. Technical analysis sessions will end in Manila December 3 and 10. And also our year-ender event where we talk about the top 10 stocks for 2017, which will be in December 17. I just like to talk more about the top 10 stocks for 2017. I have invited three of my friends, a fund manager, a hardcore fundamental analyst, and also a macroeconomist to share their views on what they believe is the top 10 stocks that is good to learn or to study this 2017. And then I'll give my insights on where I believe the market is going on a technical analysis standpoint. And just a last plug is I'll be in B Hotel tomorrow uh, for a public event called Where Should You Invest? This is for people who like to know where should you invest, especially when the market is actually dropping. Should you buy bonds, stocks? Should you start your business? Should you go into real estate? What are the industries that you should actually invest on also in the next few months and years as well? So that's what we're going to talk about. It will be tomorrow in the afternoon at B Hotel in Alabang. So if you have any friends in the South, I'm excited to see all of you. So back to the question. What should you do when the market is dropping? You have to understand and take everything into context that the market now, as of this video, it's now at 6,973, which is down almost 14% already. We're now in intraday trading, so the market could probably go up or down a bit, but it's down 14% from the highs from where it was a couple of weeks and months ago. So why am I saying all of this? You have to understand that way before a lot of the news about Donald Trump, about Obama, about the Fed raising their a possibility of the Fed raising its interest rates, Duterte, all the pivot to China, the market started to already reverse last August 8th from its highs. What do I mean by that? From a market that was headed up, we've already seen the PSEI start to reverse, headed downward, which was still continued. You have to understand, August, it's already November, so we've been already dropping for the past 3 months already. So what we're seeing now is just a recipient of a market that's headed downward and continually going down. But one thing is very very interesting. Last November 2, the market turned bearish, not just for the short and the midterm, but we've turned bearish already for the long term. We broke a very 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 strong support last November 2, which is why we're seeing the market headed down even further. So do I know when the market will go up? I don't know. It's not my responsibility to know when the market will go up. It's not my responsibility to know how low it will go, but it's my responsibility to create systems and strategies on what am I supposed to do when the market is down, when the market is up. Our goal as traders and investors is not to forecast where the market is headed, but to create our own strategy based on if the market goes down, what are you doing? If the market reverses, what are you doing? Your goal is to protect your money. Your goal is uh, to maximize your gains and minimize your losses as well. And that's the heart of this. So I created 10 tips, 10 points to help answer your question. And if you're also a newbie, or for those that are listening that are probably scared, panicking, and don't know what to do, I hope this video helps you. Every time I create videos, it's really for the benefit of all of you. The heart of this is to educate more Filipinos that the stock market, we have a very, very small stock market right now. And I want Filipinos to get the grasp of learning it the proper way, so that when more people are learning, more people will actually believe that it can be done. You can earn in the markets and you can start investing. So first thing that I'd like to point out is this. Markets move in cycles. Very, very important. You have to know that what goes up goes down, and we're in a portion of where the market is that it's in a downtrend. So when a market is in a downtrend, it will continue to go down no matter how good the company is, no matter if it's Ayala Corp, Ayala Land, no matter if it's SM Prime Holdings, no matter if it's GD Capital. When it's going down, when sellers are dominating the market, when the people are bearish and people are pessimistic, markets will go down. However, it's the value of the company that will keep it up, that will protect it from falling even further later on. But we're now in an area where it's like a waterfall. It's like an avalanche where it will just continue to spiral down until we find a level where somehow the market protects it from going down. So why am I saying this? You should know that if you're a trader, when the market is in this cycle of it's in a downtrend, you're a position trader, you should stay away. You should be in cash. If you're an investor also, you must be very, 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 very sure of the companies that you're buying, that it's fundamentally sound. And you need to have a plan that if you plan to stay in this market while the market is dropping, you need to know what you're supposed to do. I don't want to see people cut their losses, losing 50% because they panic in between because they're not sure of what companies are holding. At this point, you need to know why you are in the market. You need to know the stock that you're in. That should it drop, you need to have a firm conviction of what's supposed to happen. Second is this. Since the market is in a downtrend, negative news that you will hear from whatever perspective it is, from Trump, from the Fed hike, to whatever news is happening from the pivot to China, good or bad, if it's negative, if people perceive it as negative, it will just add fuel to a market that's already dropping. So just try to imagine a fire that's burning, and you just add bad news is like you putting more wood to a fire that's already burning. So consider it that way. Whatever you see, a market that's dropping will continue to drop until we see something change fundamentally, or we see or the market becomes so cheap that it becomes too cheap to ignore, that people start coming in already regardless of what they see. So as of now, what I'm saying is this: the market is dropping, the negative news is not helping, and it could probably bring the markets even lower. All right. So third point is this: now is not the time to listen to your emotions or to your friend. It's very easy to be scared. It's very easy to follow what your friends are doing. If they're selling at a loss, if they're selling out of panic, you have to understand your trading strategy should be unique. Your timeline and your friend's timeline are different. Why am I saying this? If I'm 33 right now, and there's another trader who's 20 years old, we both will invest until 60. The trader who's at 20 years old probably has more time in his hands, and he has probably a longer time horizon. What does it do? It allows him to actually take on more riskier trades than me because my duration is shorter, especially and compare it to a person who's at 40 or 50 or 55. The closer you are to the time you need the money, the lesser risk you should be taking. And also, another thing that you must consider is this: we all have different amounts of money that's invested in the market. What do I mean by that? The more money you have invested also means that a certain shift downward would mean more losses, but a certain shift upward as well would also mean bigger gains for you. So it means that a person who has longer time horizon, different amounts of money should have different trading strategies. I'm not including even risk here. I'm not even including what analysis you're implying. But when markets are dropping, follow your conviction, follow your uh, what you know, follow your strategy. Don't listen to the opinions of other people. I've learned it the hard way in the past that when I listen to other people's opinions, I get swayed and I tend to not follow what am I supposed to do. Number four, if you are a position trader, most of the stocks now are in a downtrend. Uh, if this if you're following the trend and you're a trend follower, know that the stocks that are in a downtrend, you're supposed to be in cash. You're supposed to wait it out. But you're supposed to not buy any stocks first. Just wait for it. Wait for key reversal patterns. I'll update you more in the next few weeks what's going to happen on the condition on the market right now. But one thing you need to consider is this: a lot of the big stocks are following the index as well. So if you're a person who's buying either an FMETF or an index fund, or the stocks that you're buying mirror somehow the movement of the index, what you can be assured of is this: stay away first, uh, stay in cash, and wait for key reversals before you come in again. Number five is this: if you're a person who would want to actually come in while the market is dropping, you have to be very selective. What I guess one of the key advantages if you're investing in the stock market is we have over 200 plus stocks in the market, and not all stocks are moving in the same way. Not all stocks are dropping. You have to understand when the market was dropping last August, September, October, there were certain stocks like FNI, Nickel, Manila Water that were still going up. So that's how you play it. That's how you move it. Be selective. If there are certain stocks that are headed down, doesn't mean that you have to totally avoid it. If you know how to read which stocks are in downtrends, which stocks are in uptrends, and you know how to read entry and exit points very well, by all means trade the market. But if you don't know how to do it yet, I would suggest stay away. But if you know how to spot uptrends, go and find those uptrends. But just be very, 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 very selective. Next is this: if you're an investor, find out cheap stocks, but buy them when the market has found a very, very strong support. As of today, Ayala Land at around 32 something is already cheap. It's one of the cheapest prices you can get Ayala Land PE ratio wise since 2012. You've never seen Ayala be this cheap for almost 4 years already. So spot cheap stocks, use the financial ratios that I've written in the books or in the seminars if you've attended our sessions, but try to spot cheap stocks. And those are stocks that are worth buying already. I've been saying over the past few months that the market is expensive, that majority of the stocks are expensive. Well, this is now your opportunity to come in and buy cheap stocks. If you'd like to put a timing element on it and you'd like to use technicals on it, well, use the support. Wait until the stock hits a level of support and it stops dropping, then you start to come in. But now is the best time for you to find cheap stocks that haven't been this cheap for a very, 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 very long time. Number seven is this: if you're doing quick trades, then continue to find oversold stocks and buy once they've hit support. These are for people who heavily use technicals. Make your channels shorter, but your support ranges would also be shorter and would not be as strong. Make sure to buy them when they hit oversold levels. Use your RSI, stochastics, or whatever oscillators that you would use to find oversold stocks. You have to remember key things you need to consider: stock coming from a high position, going down. It hits a level of support. As it hits a level of support, buy them, then sell very quick at the next resistance. You have to remember the stock is oversold. It's bearish. You don't want to hold on to a bearish stock for a very, very, very long time. So this is good for quick traders who would like to do a quick hit. Don't just buy it, just a stock went down. You have to use technical analysis. Do not trade without using technicals. It will just be you just trying to guess yourself around and trying to just make things out of what they call chamba if you're trying to do it. And you can't build a strategy out of chamba. You can't build a strategy out of intuition. You can't build a strategy out of people who tell me, Marvin, I'm hoping the stock will go up. Hope is a good thing, but you have to understand this: hope is not a strategy. You have to find a way that you build your strategy so you become profitable over the long term. Next is this: if you're doing peso cost averaging, ignore the noise and continue with your plan. So why am I saying this? Just continue to add to your contributions. Doesn't matter if you're a person who's doing peso cost, but you have to remember the fundamental reasons for peso cost averaging. Number one, you have to be in it for the long term. Number two, you know your fundamentals very well, that the stock that you're buying is cheap and is undervalued. It does not make sense doing peso cost averaging if you're not in it for the long term, if you're not buying a fundamentally sound company, if you're not buying a company that's cheap. You also must consider, if you're doing peso cost, you must buy a stock that is growing. Think about PLDT right now. It's not growing. It's not going to go anywhere until something changes in the company. Think about LC. Think about a lot of the mining stocks that are not profitable. If they're not profitable, peso cost averaging won't work as well. So don't just buy blindly. Don't just put money on a regular basis without knowing the fundamentals of the stock that you're buying. I guess this will work if you're doing an index fund, but if you're doing an index fund or FMETF, the logic about that is index funds would normally go up over time. But if you're buying select stocks, you better know the fundamentals. Number nine, if you're new, use this time to learn. Why am I saying this? It's easy to make money when the market is going up. It's easy to enjoy and to think that, hey, this will happen all the time, and I have to neglect, not learn to earn anymore. The best way for you to earn right now, for me, in my opinion, is while the market is dropping. Why? This is where your principles will all kick in. This is where experience comes in. This is where fortitude will come in also. This is where you get to know. This is that the things that you know about technicals and fundamentals will really work for your benefit. So if you're new, especially for those who've just started, don't focus on earning first. Focus on learning, because the more you know, the better decisions you will make. And earning for me is just a byproduct of what you know. I'll repeat it. Earning for me is just a byproduct of what you know. Don't be fooled that the stock market is like a casino. It's get rich quick. No, it's also a process. It's something that if you want to stay in this continually until you're 60, 70, 80 years old, you better build your skill, you better build your strategy. And what better way to learn about it when the market is down and your emotions should be thrown out the window? It's the best exercise to do it. Lastly is this. It always goes back to financial planning. Always make sure you just add extra money. Always make sure that you just use money that you won't plan to use for a very, very, very long period of time. Like what I do, I always invest, but what I always put is something that I don't plan to touch for a very long period of time. It will give you the audacity. It will give you the confidence that even if the market drops, you're supposed to be okay, because the money that you've placed there is something that you don't need. Very, very important. If you don't ever go into debt, don't ever borrow money just for you to be able to so you can add more. Don't do that. Just add to what you have. If you don't have it, just weather it out. Just put money that you are supposed to use. Don't use money na pantuition ng anak nyo. Don't use something that you plan to use in a month, 3 months, or 6 months from now. These are just 10 tips. I hope this 10 tips have helped you. This Ask Marvin session is really all for you. If you like it, please subscribe, please share. I just hope more and more Filipinos would learn more about this. It's really my heart to see more Filipinos be adept in investing and trading in the stock market. So as what I always say in our Stock Smart sessions, trade well, trade strong, and trade smart. God bless you all. I really hope to see you all soon in any of our events or seminars. Or if you see me anywhere, just feel free to say hi, so we get to know each other more. So God bless you, and have a great day ahead. Have a great weekend ahead.